Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets on this Friday the 13th is University of Missouri. Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. Not a ton for us to get into this week, but some really interesting numbers, especially as we talk about the consumer and the retail side of things. But to get things started, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, Megan, live cash cattle were down 85 cents. Those feeder cattle auctions were anywhere from steady to $1 lower this week. On the futures side, October live cattle futures contract closed up nearly 60 cents, and the September feeder cattle futures contract closed up 35 cents. Got big gains in the choice box beef price this week, up a little more than $22. That actually puts it over $1 above where it was a year ago at this time. And we just had strength across the board in all of those components in that choice box beef. On the hog side, barrels and gilts this week were down $1.20. The October lean hog futures contract closed down $1.25. Also saw a little weakness in the average pork cutout value, down a little more than $1 this week, really led by lower ham prices.
We really have seen those pork prices and those cash hog prices come back a little bit off their recent highs, and that seems to be a pattern that we're in currently, at least.
Yeah, for sure. I think we're still searching a little bit for where both pork and hog prices go as we finish out here in 2021.
Let's talk slaughter numbers. As we take a look at that, let's start first with weekly cattle numbers.
Yeah, for the week ending August 14th, we had 639,000 head of cattle estimated to be slaughtered. That's down 2,000 head from where we were a week ago and down 5,000 head from where we were a year ago at this time. On the hog side, a bigger hog run this week, 2.415 million head of hogs slaughtered this week. That's up 94,000 head from where we were a week ago. But it's still down 146,000 head from where we were a year ago.
Do we anticipate that number starting to? I don't. Maybe we don't expect them to creep back up above where they were a year ago levels. But as we get towards the last quarter of the year, do we anticipate those to start to do their traditional uptick in slaughter numbers?
Yeah, for sure, and especially on the hog side, I think, Megan, we'll see some increases perhaps from the runs that we're talking about today. However, I'm not sure that we'll ever talk about finishing the year with hog slaughter week over week that's much above where we were a year ago.
All right, let's get into retail prices. And man, there's some increases on both the beef and the pork side of things.
Yeah, so when you look at the demand side of the equation, and again, I hate to say demand and then talk only prices, it's the combination of price and quantity that matters. But when you look at the beef retail price for July, it came in at $7.53 a pound. That's a little more than 10% above where we were a year ago. So some strong numbers there. Equally, the pork retail price at $4.60 was also up 10.1% relative to July of 2020. So both of those are seeing increases. Those are also increases month over month. If we look a little bit at some of the individual categories, choice sirloin steak price to get us started, $10.54 in July. That's 12% above where we were a year ago. Maybe in a little different vein, ground beef price, $4.39. That's up 2.9% relative to a year ago. And of course, your favorite, Megan, bacon, $6.86 for July. That's nearly 19% above year ago levels.
You're making me feel bad that it appears that I don't love other cuts of pork, which is not the case because I'll take some ham or pork chop any day.
Well, I didn't say you didn't like other cuts. It's just your favorite, right?
Sometimes, but other thing, I'm always down for some ribs. We don't complain in this house. We just like.
So for August, we'll make sure we put rib prices down for the comparison.
So when we look at this though, like let's talk a little bit about these higher prices as we look at that, and we're continuing to see this. Is this supportive that demand obviously is strong, but we still have consumers willing to pay these prices?
So so number one, I think yes, the demand has been strong, but I also like to remind us that the supply situation has changed in terms of what was growth in red meat supplies for much of the past 5, 6 years. When you look at 2021, and you and I talked about those slaughter numbers early on being down, I think that's helped. I mean, let's just realize we started the year with a pork retail price of $4.10 a pound, and now we're sitting at $4.60. We started the year with a beef choice retail price about $6.40, and now we sit at $7.50. Those are some really nice gains. And again, I go both strong demand and then less expansion of supplies responsible for where we sit today.
We go from that good news kind of into a consumer sentiment number that really, as you take a look at this number from August, is quite concerning.
So Megan, let's hope this is an aberration when we talk about this August number, and when September rolls around, we're back. But it was a tough result for August out of consumer sentiment data today. The August number at 70.2, that's down 13.5% from where we were in July, and down 5.3% from where we were in 2020. So, you think about 2020, we often talk about how much uncertainty there was because of COVID-19, and this August data kind of comes back there. I think the Delta variant has certainly gotten the attention of a lot of folks. That decline from July is some of the largest declines we've seen. All right, so April of 2020 was a large decline. October of 2008 was a large decline, but this ranks up there with both of those periods. And really, it's a expectations portion of the index that matters here. So month over month, that index of consumer expectations down 17.5% is responsible for the large decline in the overall index. So folks are certainly worried about the economy going forward, worried about what appears to be worried about what the Delta variant is going to do in terms of economic growth as we start to talk about the latter few months of this year.
Scott, do we really get concerned if we start, and I hate to say this out loud, but if we start to talk shutdowns again, more restrictions when it comes to indoor eating, those types of things, and what kind of position does that put us in that whole supply chain as well, and then maybe trickling back to impact prices, retail prices, those types of things also?
So I certainly think we can have some effects. Megan, I think it's important to remind us that where we are today and where we were when we shut down in 2020 are very different. And then I say that more here to start with from the retail side. I see restaurants that have pivoted to a much better carry-out alternative that many of them just didn't have when they were forced to close in 2020. So perhaps it's a little different in terms of the drag that we see from the retail side. Likewise, I think the processing industry is in a better place than it was in 2020. Again, it'll just depend on the particulars. Those plants could certainly have enough, I suppose, COVID outbreaks of their workers to create issues for them. They're already short of labor, but again, I think they're much more prepared to go through this if we continue to see surges than we were in 2020. So maybe not quite the same concerns and the same backup that we would have seen last year.
And that labor issue is one that is not going away anytime soon, especially as it relates to the ag sector.
That is correct. It's a very, I don't care what sector you're in right now. I think everybody is certainly looking for more workers, and it's going to take time for that to work out. And likewise, I think it's going to take continued higher wages to pull workers into some of these positions.
Scott, as we wind down today, let's talk a little supply and demand. That was the big report that came out this week. We'll talk corn numbers in just a second, but let's take a look at USDA's projections for red meat production.
Yeah, so if we look at 2021 beef, pork, and chicken production, all three, USDA actually lowered by 320 million pounds their projection of production of those three meats for 2021. That was primarily due to what was lowered pork production in August relative to July. So good news there. And if you look forward into 2022, they also pulled down production of those three meats for 2022. Now, that came from what was a 360 million pound decrease in beef production from the July to August projections for 2022. So less supplies of meat. That's good news for prices. Now, from the trade standpoint, they also reduced net exports of beef, pork, and chicken relative to where they were in July. In 2021, they reduced by about 230 million pounds. In 2022, they reduced by 460 million pounds. And that was both less beef net exports in 22 and less pork net exports in 22. And their August projection now shows less net exports of pork in 22 than what they are projecting in 21.
The big surprise out of yesterday's report?
Yeah, corn yields, I think was the big surprise out of the report. Came in outside of the low end of the pre-report estimates. 174.6 is the estimated yield. Places like North Dakota, South Dakota, Minnesota, certainly down roughly 30 bushels per acre, according to USDA. In the August numbers relative to where they were last year, that was offset in large part by strong yields, Iowa, Illinois, Indiana, Ohio. If you looked at the U.S., that 174.6, that's actually above where we were a year ago. I think we came in at 172 there, but unfortunately that was down from the July WASDE of 179.5. It did reduce ending stocks in USDA's SNU to 1.242 billion bushels. I like to make sure I describe this as that kind of stock level, I think, creates more volatility for feed costs going forward. I remind us volatility is both higher and lower. It's just going to depend on what might happen to yields going forward or what might happen to the demand categories going forward. But don't want folks to get caught in those higher price periods if they can help it. And I know, yes, feed costs are a lot higher than where they were a year ago at this time, but the volatility we can see in the short term could get large, and especially if the drought continues in some parts of the country.
Definitely something that producers are going to need to watch and take into account, knowing as we continue to watch how these play out month after month, how much do producers need to aggressively and progressively manage their risk, especially on the input side of things?
Yeah, so I'm a good economist. I think the answer is it depends. I will say for producers that don't have a lot of flexibility in terms of the ability to manage higher input costs, maybe they're the ones that need to think harder about locking in some of the current opportunities when they exist. At the same time, crop's not in the bin yet. I think we have a good idea that it's going to be a shorter crop. Get some better weather here between now and the end of the year. Maybe we grow that yield from 174.6. I just always say, if something happens in markets that we get a move lower in corn futures, let's say, maybe we want to take advantage of that opportunity to at least lock in a portion of those inputs going forward.
Scott, that's it for us this week. As we look ahead to next week, what reports are we watching for?
Yeah, so late next week, we'll get livestock slaughter, and then we finish next week with another cattle on feed report.
I can't wait. Great to see you.
Great to see you as well, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there as well. And for really great podcasts, whether you're in the truck, in the tractor, in the combine, on the road, wherever, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.